this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, May 10th, 2024. I recorded this video before the stock market opened today. My wife and I are driving up to Virginia today to visit our kids over Mother Day's weekend, but if something important happens in the market today, then I will address it tomorrow. I doubt that'll be the case, since Wall Street is waiting to see what the Fed does next, which probably won't be revealed until after the next meeting of the Federal Open Market Committee on June 12th. Nevertheless, the stock market remained in rally mode this week. Since bottoming out below 5,000 on April 19th, the S&P 500 index closed above 5,200 yesterday for the first time in 2 months. That puts it about 1 percentage point below its all-time high, near 5265, achieved on March 28th, which is impressive considering the bevy of mixed economic data that has come out since then. So here's a year-to-date chart of the S&P 500. You can see it peaking back here in late March, the big drop that bottomed out in mid-April. And since then, we had one little dip there, but really that's quite a recovery. If I draw the line across from here, we're just a little below the all-time high. Now, one reason given for the stock market's recent rally is last week's jobs report for April. Last month, the national employment rate held steady at 3.9%, while the economy added 175,000 new jobs. That is considerably less than the monthly average of 242,000 new jobs over the prior 12 months. That should reduce pressure on employers to raise wages, which in turn should help keep a lid on retail prices. So here's that report, and down here I've highlighted in blue for you. Over the past 12 months, average hourly earnings have increased. And that one sentence, by the way, is more important than almost everything else in that report together. That is really what Wall Street wanted to hear. In April, wages grew by 3.9% on a year-over-year basis. That is considerably less than the 4.7% figure reported in February and is the lowest it has been since August 2021. Now here's a chart, wage growth tracker, over the past, well really since 1998. Now this has not been updated for April. It shows March's figure at 4.7, but if we added April's unemployment rate of 3.9, that would fall below the 4% level here and bring us all the way back over here to August of 2021. And you can see it's very close to where it was oscillating actually prior to the pandemic. Now, as wages come down, consumers have less discretionary income with which to purchase goods and services. Wall Street is anticipating that the Fed may feel compelled to cut interest rates if wage growth falls much further, but that is only one variable that the Fed must consider. The Fed is also looking at commodity prices since they are fundamental to inflation. There is good news on that front too. The price of wheat has fallen every month this year and is lower now than before the onset of the coronavirus pandemic 4 years ago. So here's the St. Louis Fed data. And by the way, I love this website. There's a lot of really interesting information on all sorts of economic data. But here's a chart over the past 5 years of the global price of wheat. Now, way over here on the right is the average price of, and I believe this is, it says US dollars per metric ton, of roughly $208 and change. We've come all the way over here, September of 2020, which was of course about 6-7 months after the pandemic broke out. So then you get into let's call it January 2020, before we really knew about the pandemic. So it's still a little higher than that, but it's actually coming way down, and that's obviously good for food prices since so many foods use wheat. Now the same is also true for the price of corn. And I believe do I have that saved in here? No. However, meat prices, including beef and chicken, remain high. So I'm going to show you the average price of ground beef over the past 5 years. And if you go to the grocery store, you're not going to be surprised by this. Here it is based on cost per pound, U.S. city average. In March it was $5.13. Go back here to before the pandemic, it was under $4. So you know, we all know that. Same thing with chicken. If we look at, say, the average price of chicken, where do we got that here? Well, I don't have my chicken saved either, but let me show you fruits like, say, orange. We've got, look at this spike over here. So I'm going to show you the 5-year chart, and this is US dollars per pound. Back before the pandemic, it was right around $1 a pound. Now over $3 a pound, closer to $4. Let's see, what else do I have saved up in here? Bananas. Not that I'm a big banana eater, but some people are. Look at that huge spike 2022 banana prices. U.S. dollars per metric ton. Again, before the pandemic, let's call it a little under $1,200. Now around $1,600. And finally, I think, and I don't think I showed you this already, but here's the price of wheat. Price of rice. This surprises me. I wouldn't think of rice as something that would inflate that much, but look at rice. Cost per pound, U.S. city average, before the pandemic, around what's that, 71, 72 cents. Now over $1. I'm not sure how the Fed will interpret that mixed bag of groceries, but consumers rate high food prices as one of their top complaints with the current economy. Here's the University of Michigan results. This article is a couple weeks ago from April, but nevertheless, I highlighted this for you. Sentiment for consumers mentioning food were substantially higher than for those who did not, suggesting that high food prices of food continue to weigh on a sizable share of consumers. Now, there's an old saying on Wall Street, sell in May and go away. So the thinking goes, most of the stock market's annual gains occur during the first half of the year, and most of its big drops happen during the second half of the year. Well, that isn't really true. Historically, July through September is the best performing quarter of the year on average. But perceptions become reality if enough people act on them, and we're going to see if that happens here in the next month or so. So that's this week's PF video update, and I look forward to talking to you in another week. Thank you.